Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 4th of March. All right, now as we come out of that North American session, I've just missed the update there with the currencies here, as they all the ranges for all instruments are reset, especially for the tradable instruments, not the equities, are reset at 5 p.m. New York. Right, that's the changeover of the day. So now, looking at the markets here, you've got a serious, what we call a risk-off situation where equity markets are getting pummeled, especially those tech stocks. It sort of fitted in, like all the dollar block, if you had got this a couple of minutes ago, we're all going down and the other pairs were going up. Sort of a nice structure. But what you have to understand is the daily change of the pairs. I know this has just been reset, but going back a minute or so, you would have seen very small moves. Right, we've seen very small moves across the board. Now, this is where your knowledge of the markets comes into play. Now, you've got to see a red here, right? I've got the equity futures, I've got the equities themselves, sea of red. And then you've got the US Treasury bonds. Now, this is the price. So if the price is going down, the yield is going up, right? This is the core structure of understanding how bond prices work. If bonds are going up, the yield is going up, that means interest rates, underlying interest rates are going up. Right, and that's good for the dollar, good for US dollar, and that's the structure of this. I might even try and get the yield into this table so you can sort of see the difference between the two. So, because why am I talking about that? Well, it's a major piece of the puzzle here. Why the dollar is sort of hanging in there, right? And if anything, looking to go a little bit higher. Get the 10-year here back up to 1.5. Now, last week this was up to 1.6, but it was a really knee-jerk reaction. What we're seeing now is the US bond markets sort of continuing the yield to continuing to increase. And, you know, the Fed have already come out and said they're not really worried about higher interest rates, which is what they're talking about here. So they're happy to let the yields go. It makes the US dollar more appealing. Now, we've got a couple of good things happening. That's good because I was saying this to a couple of traders yesterday. The fact that we are talking about US Treasury bonds, right, it's a really good thing because that's going to force the hand of the central banks. Now, the RBA in Australia have already started buying bonds to try and reduce the yield. That's quite interesting. And we're also seeing this is going to coalesce with the data, right, that's coming out now. A bit of mixed data here in the US. ISM non-manufacturing numbers much weaker. Some PMI numbers there a little bit stronger. If I just go up a little bit higher, we had a bit of a mixed reaction here, mixed bag on the European numbers, not far off the money, but slightly weaker. The German services PMI, the Eurozone numbers a little bit stronger, and the producer prices just a little bit higher too. So what we're seeing is, you know, particularly for the euro, and this is a big part of the dollar basket, is a bit of a mixed numbers here, mixed bag as far as the numbers. And that's why when you come over and have a look, see what the US dollar's been doing against the basket, it's pretty much just trading sideways. Right, so we had that initial move at the end of last week. We had the knee-jerk correction. Now the dollar looks like it's coming back on sort of firmer footing on the back of the those treasury yields. Right, so when you come across and have a look at the major currency pairs, as I said, we saw it was quite interesting coming into Monday because we saw that big move. The treasuries had corrected, but the currencies hadn't, and that left that little knee-jerk. And you can see where a lot of these currencies sort of came back. Sterling, not so much. And Aussie came back, but with also the RBA. We saw that sort of initial move. This one here, the euro, is a bit more evident. So now we're seeing a bit of more of a consistent move with those US Treasury yields. It's going to support a stronger dollar, I think, as we go forward. And that's something to consider. But just check out your charts here. I was talking about this. If you go back and have a look at Monday's sort of video, when the currencies are down here, leading into the non-farm payrolls this Friday, I was expecting these currencies to come back. Like, you don't see a big bounce and then with a big risk number at the end of the week. Of course, people are going to take cash off the table and you see the currencies come back into play. What we've got working for us now at the same time is the US Treasury yields. We get really strong non-farm payrolls data. We can start to see the dollar really get some firm footing and take off. Right, that's what we're looking for. So coming into Thursday's trading, it's really important you start to focus on the key pairs, technically what's coming around. Look at where the data is going to be coming from, which is potential direction. Retail sales in the Eurozone, it's not usually a cracking number, but I tell you what, the poll here is for really crap numbers. So if they're much better than that, we could get a bounce in euro. If they're a hell of a lot worse, well, then that supports that lower euro, which fits in with current momentum. You got the weekly initial jobless claims numbers there as well. Actually, don't forget the unemployment figures there out of the Eurozone. That has come into play before. The initial jobless claims, it's not a lead into the non-farms, but it's just a number that comes out weekly and has been respected for some time. But coming into Thursday's trading in North America, once these numbers are out of the way, the jobless numbers, okay, it's really, the markets will start to really focus quite heavily on the non-farm payrolls and start to factor those in. So what they do is they close out a lot of risk, a lot of positions, open positions, and then they wait for the numbers to come out and we see how it goes from there. So really your job around trading today is really all about connecting the dots. Okay, so just looking across the board, we know the equity markets have come off. Now, if you're trading through the Asian session and early Europe, keep an eye on the US futures, equity futures. They will tell us if there's been any change in sentiment from any news or anything that comes out during that day, right? And that could lead into the pairs. What you want to be looking at, if you've got access to any sort of pricing, keep an eye on the treasury bonds. This is where, the price is coming off, yields going up. It supports the strong dollar. So if you see that move from this point, well, then that's where the direction will come from. Okay. And then we're going to get the non-farm payrolls on top of that. This is really dynamic, moving markets, less geopolitical rubbish, which is awesome. And then we can start to really pick the eyes out of where the currencies are going and where to get in. Now, once the US dollar has clear direction, it's going to be good trading. So prepare yourself. If the dollar does come back, say, strong, you want to get onto your charts here and work out which pairs, especially say on the major pairs, if we get a strong dollar perspective, where can I get into some of these pairs? Or if we start to see the treasuries turn around and we get weak non-farm payrolls, like I'm a day in front of this, but you want to look for where you can be getting into these trades on the reversal. And you know what? If we did see a weak dollar, we've got resistance levels here across the board to take advantage of. And you want to, that's why you're sort of tuning up your charts each day, is to identify those levels. All right. So make sure you go through your chart, just like I'm doing here, retuning Aussie and Kiwi resistance, sterling, euro, and support on the dollar pairs, because that's where we're going to get in. All right. Plenty to happen, plenty to go on here, guys. And it's, as I was saying, this is a really good situation where we are getting, good activity across the board. The relative strength, I mean, it was a shame I just didn't beat the 5 o'clock turnaround, because all these US dollar pairs were blue, right? The dollar's going up pretty much against everything at the moment. And that's a good trading situation. Now, of course, what are we here? We're 8 minutes past the changeover. And that's why this looks like red and green and a little bit of blue. But believe me, the dollar is going up against everything. That's good. We just need confirmation from the numbers and the treasuries. That's where direction's coming from at the moment. All right, guys. Very interesting, I know, for some of you. If you don't understand that, probably jump online, the virtual trading floors, and we can probably run through something to get you up the curve. All right, guys. Have a good one. All the best. Cheerio.